Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Monday, March 3, 2025. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? We got tons of stuff on the docket. Obviously, we have to go back to Friday and check out the rip-roaring rocket ride we had from coming up just short of our favorite number of late of 581.40. They came close, ripped it back up in the other direction. Looked like they were sticking the landing. Looked like that was a low on Friday. We did have some traders that front ran that and got paid accordingly, only to have the market gap up this morning and come all the way back down to satisfy the number. And it was, as they say in the trading parlance, unfinished business. What did that look like from an intraday perspective at the end of the day today? Here's a 5-minute chart, and you could see they spiked the number. They came into it, they ripped it back up in the other direction, and went up about 25 points into the close from that number. And we'll give that a funny how that works. So either way, whether it was Friday from a front-running perspective or today from a spike it through perspective, both times they ripped it back up in the other direction, signifying the importance of what? Of the number. How do you like dem apples? Now, tomorrow on what's called Turnaround Tuesday, we have an on-time type of situation. Can they flush it down one more time on the on-time day? Absolutely they can. What's the next number down? Funny you should ask. Here's the next two numbers down. We'll call it a buy zone, 576.05, 571.20. I would write these down, put it on a sticky note. Let's flip over to the weekly chart and see how this unfolds from a bigger picture perspective. Here, in the weekly chart, we have what? A big time breakup candle low. Will she test that low? We're not 100% sure, but if she does, down around 576, give or take, that's an area of interest. And then you go down one notch, staying on the weekly chart, and you have another big time breakup candle low. 571.20 is my number. It's close enough to said breakup candle low. I would write both these numbers down, put them on a sticky note, whether it's the tariff schmariff situation, whether it's chips, whether it's anything under the sun, we can assign any excuse we want for why the market is up or down on any given day. All we have to do, you, me, and everybody else involved here, is focus on the numbers. Let's not forget what we've been discussing since the fourth quarter of 2024. Very simply, we're looking for a February, March low. Where are we? March 3rd. Have we found a low yet? We don't know yet, but the market is selling off, and it is selling off into our sweet spot of a February/March low. We have some tinfoil hat stuff coming up in about a week and a half or so, and that's interesting information. I would write that down, put it on a sticky note. We'll just give you a little taste test. Friday, March 14th is a total lunar eclipse. Maybe it's meaningful, maybe it's not. Might want to jot that down. It's your choice whether you want to put it on a sticky note or not. Might as well take a look at the monthly chart. And the reason we do that is because we have a big time monthly candle, breakup candle low. The low comes in at 567.89. From a monthly chart perspective, you would expect a bull-bear battle around that place if, a capital I, capital F, if she was going to test the big-time monthly chart breakup candle low. Write that down. Put it on a sticky note. How about we take a little detour? Let's take a look at Travelers, TRV. This is a swing trade. Lazy swing trader, automagical algo system. Entry alert issued 233.46. Guess what? Today's exit alert sent to members 262.95. High of day was 263.08. How does she know that? She meaning the lazy swing trader automagical algo system. And of course, on the way down today, we had a new entry alert issued this afternoon to members from, yes, the lazy swing trader automagical algo system. Here's just a refresher of the performance of the lazy swing trader. You can see here on the right, everything is in not black and white, but green and red. And you see there's a couple of red here, and that's expected. But out of 25 trades, looks like we got 3 red. Small losses. We keep them small and fast. We got a lot of base hits in here. 7 or 8%. Those are great. 5 or 6%. Those are great. Another 5, another 7 or 8, an 18, an 8, a 10, a 9. You could see here, this is how it works. Base hits put you in what's called the Hall of Fame. We just click them off one at a time. What about inside the numbers? How'd we do today in the live room? We did pretty good today in the live room. Let's check out some of the numbers that were put on the board at 0 dark 30. We woke up green to what's called a follow-through kind of day. Follow-through from Friday's rip into the close. We had a bull pivot and a bear pivot today. The bull pivot was 595.45. By the end of the day, she was long gone from that. And a bear pivot today, 594.20. Let's start there. As you can see, she opened above the bull pivot and got right back below the bull pivot. So there was nothing bullish while she was below the bull pivot. It pays to know your pivots. Now the bear pivot was 594.20. What signifies a bear pivot? If she's below the bear pivot, she's bearish, she can leak, she can sell soft, she can sell hard. The bear pivot, you don't want to be long beneath the bear pivot until you get to an important number. Got below, tried to fight back, got below, tried to fight back, came back for a one last retest, hit it on the button a few times, and sold off into the end of the day. Down to where? Down to our number. Remember, pause the video. Go back to the chart to double check the work. Never really gave us bona fide trade today. We had some traders that front ran a couple of things. We had some traders that made some money in the live room. But all in all, she was really just poised to do the hard routine, getting all the way down to the number that we've been interested in for about 2 weeks. Pause the video. Read the notes, check the numbers, go back to the chart, and double check all the work. The other thing is, if you're interested in these other markets, I would plug some of these numbers in on your charts, whether it be from the Qs or the IWM, the support and resistance numbers. Find out how those worked out. Those of you interested will actually do the work, plug them on your charts, and then you'll scratch your head and say, holy shit, check out these numbers. What's going on over in Camp IWM? She's been bearish for quite some time. Below all the moving averages, the trend is in fact your friend. She's been leaking, she's been selling. Let's flip over to the weekly chart, and you can see here, closed last week comfortably below the 50-period moving average. Follow through today to start the week. Look at this spot right here. You see this big-time breakup candle low, and you see how that coincides with the convergence of the 100 and the 200-period moving average. That in and of itself has to be an important area. Why does it have to be? Because I've been doing this a long time, and I know that's going to be an important area. It's got the makings of what we call a full stack. Even number at 200, big time breakup candle low, convergence of 2 moving averages, long-term moving averages, 100 and 200. Those are slower moving averages. So coming into those in a straight line should be good for support. Might want to write that down, put it on a sticky note. Just from a daily chart perspective, check out this 202, let's say 202.20, 202.30 area. That's kind of the next thing on the daily chart up on, as they say in the trading parlance, on the docket. Camp IWM. Leading the charge on the downside today, down 2.73%. SPY was down 1.75%. My favorite market leading indicator, and guess what? Here's my second favorite market leading indicator, a number one canary in the coal mine. Again, below all the moving averages. The trend is your friend. She's bearish. Daily chart. Weekly chart, you can see she was riding that 50 that we've been talking about day after day after day. Gave it up today. Again, the week is early. She could snap right back. But here comes that 100 period moving average. And then you have the 200 down here. Second favorite market leading indicator, a number one canary in the coal mine, down 284 points today, 1.78% on par with the S&P. The Qs, 2% down today. Here's the weekly chart. You can see where that line kind of coincides with the 50 period moving average. Flip back over to the daily chart. And you can see here approaching the last moving average, daily chart moving average in the line of defense. Spike through the 200 period moving average, get to the number 486.85, call it 487, give or take. That's an area from a daily chart perspective of daily chart support. Down 2% today, $11. That's a nice little down day for the Q people. What about the financials? Anything wrong with the financials? Not really. Down less than 1%, 0.8%, 44 cents. Above all the moving averages, trend is your friend. We're not going to make a federal case out of 44 cents. What we are going to do is point out that she's still remaining above all the moving averages. And we know how this goes with the financials. If the structure of the financials, or if the financials, I should say, if there's nothing wrong with the overall financial complex, there's likely nothing wrong with the overall structure of the market. And this is a decline that will, as they say in the trading parlance, bounce back. What about Smash Mouth? How about down 4%, almost $10, $9.76. The moving averages on the daily chart are long and gone. The moving averages on the weekly chart, you can see here last week and into this week, giving up the 50 and 20 period moving averages. This is, as they say in the trading parlance, a bearish wedgish pattern. We've been eyeballing this for quite some time. And if she started declining, giving up the moving averages, this was going to play out to where? Yeah, to the downside like this. That's what's happening now. Just from a big picture perspective, you want to keep your eye on this 100 period moving average. Why? Big fat round number at 200, big time breakup candle low, draw a line over, you got three things. You're beginning to have a full stack. 200, big fat round number, 100 period moving average, big time breakup candle low. How you doing? I would write that down, put it on a sticky note. And by the way, if I told you how much I appreciate each and every one of you, without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.